Over the last 2 days, we have brought together institutions with different strengths and perspectives to deliberate on 7 areas that are important for the next phase of our growth, particularly of the financial sector. I've listened with interest to the actionable strategies presented today. I'm particularly encouraged that the discussions have moved beyond identifying issues to suggesting concrete ways forward. The true value of this confluence, however, will lie in translating these ideas into action and in the outcomes they ultimately create. So our public sector banks today are operating from a position of considerable strength, which is what I mentioned yesterday in my inaugural remark. The task now is to use that strength with greater ambition, to identify opportunities early, to build capabilities ahead of demand, and also to ensure that our institutions remain at the forefront of India's next phase of economic growth. I repeat my appreciation of the team DFS for having come up with background notes for all the 7 topics which you discussed between yesterday and today. I think when government wants to work, when government is inclined to put its heart and soul and present something, they do it really incomparably well. And this DFS exercise, where the 7 documents were prepared, for you all to go through well in advance before you came here and then deliberated on those 7 topics, stands out as one of those high quality publications which can be on their own standalone documents rather than a preparatory note before you deliberate it. My appreciations to the secretary, the joint secretary, the additional secretary and the team, the directors and everyone who in a very short span of time produced those remarkable 7 documents. When the quality of seed is good, the crop yield also is good. So when the preparatory documents are themselves of this high order, the deliberations and the discussions have yielded very good, actionable outcomes. So each one of the groups deserve a high 5, if I can say that, for your performance and the presentation, and committing yourself to undertake those actions, 0 to 6, meaning within 6 months what you have to do, 6 to 12 months what you have to do, and 12 to 18 months you complete what you have set for yourselves under the 7 categories. So I think you're making the media's job very easy. They are here, they are very keenly watching what the banks have got to say, but you've really done rigorous, very systematic consultation, deliberation, that the outcomes are also appealing enough and also with the timeline given. Now, if I could talk on the banking for youth, a focused campaign is something which I think is required. India is one of the world's largest, youngest population countries. Our young people will increasingly shape the country's patterns of consumption, savings, investments, entrepreneurship, and wealth creation. In all this, youth are going to set for us a certain standard. Banking is also the foundational infrastructure of a person's livelihood journey. Hence, financial capability should develop seamlessly alongside adulthood, not as a reactive, stressful adjustment upon starting one's first professional engagement. So engaging them early, therefore, presents both an important responsibility and a significant opportunity for our banks. In this context, I would like the public sector banks to consider launching a focused, month-long Banking for Youth campaign commencing 2nd October 2026, Mahatma Gandhi Jayanti, with particular outreach to young citizens above 16 years of age. It could be coordinated through DFS and the IBA. The campaign should actively reach young people at the start of their financial journey, bring them into formal banking system, and establish an early, meaningful connection. Banks could take this engagement to young people rather than wait for them to come to branches. Colleges and universities, skill-building institutions, and other campuses can become important touch points for the campaign through account opening initiatives, financial awareness initiatives, and direct interaction with banking fraternity. Dedicated youth banking spaces such as Yuva kiosks or Yuva Banking Mitra could also be created at physical bank branches, where a dedicated employee who, among doing other things, could help your youth navigate their financial journey. Equal emphasis should be given to building awareness of the formal credit ecosystem, including credit scores, various bank credit products, and government credit schemes. This will enable youth to easily access finance for their future entrepreneurial journey. Simultaneously, banks should also sensitize our youth about the importance of maintaining good credit scores and history for responsible credit discipline. Our youth are also keen to learn. Banks could also offer free online learning content in collaboration with reputed educational platforms and institutions. Using learning and skill development as an avenue to engage with youth and bring them into formal banking fold. To attract youth, banks could also complement their banking proposition with lifestyle-linked benefits. We saw in the data that you presented that 66% of all the UPI transaction is being undertaken by those who are in the age group of 18 to 29. That's a world there waiting for you to access them. They're tech savvy. The presenter did mention they are very tech savvy youth. Banking should reach tech savvy people. So when I said you could complement your banking propositions with lifestyle-linked benefits, I was thinking of coupons and vouchers for fitness centers, yoga centers, and credible mental wellness platforms. Young Indians have grown up with smartphones. You recognize them as tech savvy. We recognize the numbers who are using using UPI transactions. So UPI and on-demand digital services are already familiar to them. They expect banking to be simple, intuitive, personalized, and available round the clock. Public sector banks must therefore keep pace with these expectations. Pardon me if I say with some liberty, because I take the blame as much as all of you all. Public sector banks still give the impression of a government bank. Private banks are a lot more, attractive. They reach them, they talk to them. I've heard quite a few young people who are known to me saying they have an account. I said, so which bank? I'm not naming any bank. They named all the private banks on the earth. And the young people who spoke to me, not because I'm the finance minister, they know me even otherwise, did not name even one public sector bank. They are young, meaning they're less than 25, each one of them. And in my curiosity, I said, oh wow, all of you seem to have private sector in your mind. Why? They were very hesitant to say public sector banks, ma'am, it's okay. It's not cool. Their expression was this: I need public sector banks not to be not cool. You should please get some young people to talk to you all. What makes you appear cool? Or at least one portion of your banks should, when they sit in front of the customers, make sure everything is cool. Banking is serious business. I'm not trivializing it. Banking is very, very conventional, and it has to be absolutely prudentially, tight and fair. And I don't want to trivialize that at all. But somewhere, private banks seem to have that picture of being banks, but cool enough as well. Just a thought. I'm not recommending each one of you to go and do something to make you all appear cool, but not bank enough. Just that balance. So, we should keep pace with the expectation of the youth. Therefore, as an important part of this campaign that you may want to undertake from 2nd October, the Indian Banks Association could also explore launching a web and a mobile-friendly portal dedicated to banking awareness for youth. IBA, in coordination with stakeholders, PSBs and DFS, could think of developing this portal as a single point where young people can understand banking services and financial opportunities suited to their needs and connect with the appropriate banking services. The portal could be designed from the perspective of a young person entering the financial system with simple and youth-friendly FAQs and guidance on safe banking practices, KYC, education, and skilling and finance, and entrepreneurship, and other relevant financial services. The portal can also help perhaps guide them to the nearest public sector bank branch where they can open a basic savings bank deposit account with no banking charges, interact with bank officials, and also access appropriate banking services. So essentially, a simple no-frills account, because you're talking of bringing financial inclusion to those who are in the age group of 16 to 18, because after that, they'll certainly come into the bank in some way or the other. So you should make it a no-frills account. The online portal can also gamify the awareness campaign. Interactive features such as quizzes, interesting graphics, and certificates can be built or can be made to bring in interest among our youth. Nudges towards positive financial behavior, and such as points and tokens, can also be given with some restricted use, end use that is. While the overall campaign may have a common framework, each of the 12 PSBs should develop its own strategy to attract and engage youth based on its product offering, regional presence, and institutional strengths. The larger objective should be to build a long-term banking relationship from campus to career and beyond. I heard in one of the presentation that you're looking at a life cycle approach. Somebody who enters the bank as a young person should not be given one, oh, you want a loan for building a house, you take the money. And after that, once the loan is returned, you forgot. No, that person, you have to build a relationship for his entire life. So you have to have products which are going to be given to them at different stages in their lives so that that individual thinks, as for every banking solution, I have a bank already. It's not as if it's good enough for home loans, but not otherwise. So you have to be nimble with your clients. So the long-term banking relationship from campus to career and beyond, rather than one-time account opening engagement. Banks should plan for seamless progression across life stages, education, job, marriage, and so on, and aim to become the preferred financial partner. Most importantly, this should not remain a one-month exercise. The campaign should be the starting point for sustained engagement with young customers. A banking relationship between the ages 16 and 18 can deepen over decades as a young person moves through his education or her education, employment, entrepreneurship, home ownership, investment, wealth creation, and so on. So public sector banks must be the first and the most trusted choice of young Indians. Whether they are opening their first account, receiving their first salary, pursuing higher education, and starting an enterprise or making their first investment. You should be a part of their lives. I was very keenly observing and hearing the presentation on priority sector lending. Addressing the emerging gaps is what I would think should be the essence of the priority sector lending subject. I would also like to draw attention to the very priority sector lending itself. Our public sector banks have historically played an important role in ensuring the flow of institutional credit to priority sector and advancing financial inclusion. Credit to farmers, MSMEs, Mudra beneficiaries, weaker sections, and disadvantaged communities remain a top priority of our government. Our objective must be to expand credit while also improving the quality of priority sector lending. Its success should be assessed not merely by numerical targets, but by whether the credit is timely, whether the credit is adequate, and is it productive, and whether it is improving incomes, productivity, and resilience. I would like to draw your attention to the Honorable Prime Minister's address 3 days ago on 15th August 2026. In the second stream of the Prime Minister's vision of Sapt Dhara, the 7 Dharas, the second one, he placed great emphasis on agriculture. I'm not quoting him again, but he did say we must move forward in the direction of food processing as well. Our farmers now have access to global markets, the Honorable Prime Minister said. We have to move from the farm to the export market. So he went on to talk more about. So banks must translate this vision of the Prime Minister into appropriately designed and targeted agricultural financing. In particular, they must substantially expand credit to farmers growing pulses and oil seeds, which will reduce India's dependence on imports, if we are talking about Atmanirbharta, and help soil health, help in improving soil health. So if there is a discerning approach to lending to farmers, not just blindly, oh, farm loan, take it this much. You should be promoting farmers who are moving towards growing pulses and growing oil seeds. This particular effort should be closely aligned with the Prime Minister's Dhan Dhanya Krishi Yojana, particularly in the districts covered under the scheme. The scheme covers 100 districts, 100. Banks should improve the availability of short-term and long-term credit in these districts. to enhance productivity, promote crop diversification and sustainable agriculture, expand irrigation and strengthen post-harvest storage and allied infrastructure. So when we are talking and we had that kind of an exchange, I was talking to the chairman SBI and I heard in some of your presentation the A to Z coverage for each of the activities. Today you're all bits and pieces everywhere. Probably you're touching each one of the A to Z. But the strength of covering A to Z on the whole should be enjoyed by that sector. If that A to Z approach of banks to make sure that you're looking at farm product outside of the farm, meaning as soon as the harvest is done outside of the farm gate, till it goes to the consumer, there are ever so many opportunities where probably each one is present, one doing unknowingly some activity and somebody else doing something. Instead, if there is a comprehensive understanding among you, and there is an understanding of how you fund what, where, and in which region, where there is actually a good commercial sense, because you have to make your money. India's banking sector's approach will have a multiplier effect on the Indian economy. Instead of you looking at agriculture, I have to target, so I'll give this much because government is after me, priority sector lending, give MSME this much. Just aside, as an aside, I would want to say, I had reviewed more than 3 times the priority sector lending shortfall. There's just a lot of cheap money available for the economy to benefit from it. The amount of shortfall, meaning that which you couldn't make, that which you couldn't reach the target and that which comes back, and then we go about repooling it to NABARD and SIDBI and HUDCO and Mudra Bank, makes me feel that there's so much more work to be done. Banks can push the envelope even more. I don't need to get the shortfall back again for me to repool through NABARD. Why is it that you wouldn't want to do it yourselves? After all, if every time we are quoting the objective of this government, saying give priority, make sure the priority sector lending reaches everybody, and you're present in almost every place, and if you have your sponsored rural bank, regional rural banks, why wouldn't you want to use the entire priority sector amount which is targeted for you all? Why should there be a money which is coming back as shortfall, not, because they couldn't complete their targets? So your approach to dealing with priority sector lending should be a lot more robust. I don't want money coming back for me to send back to NABARD and SIDBI. Why wouldn't you want to complete it yourselves? You have your RRBs. Can you not also push through them? So think about it. I think that is one thing I would have loved to hear here as a part of the discussions that you've had. But never mind, because I've had these meetings with the DFS and RBI, I put this concern back to you all, so that although it was not deliberated upon, you would want to please include it. Banks should improve the availability of short-term and long-term credit in these districts, the Dandanya Yojana districts. So that might improve the sustainability of agriculture, expand irrigation, strengthen post-harvest storage, and so on, which I mentioned a minute ago. Agricultural lending must increasingly build climate resilience. Through appropriately designed credit products and coordination with agricultural institutions, banks should encourage high-yielding and climate-resilient varieties. Chemical-free and other good agricultural practices, water conservation, and micro-irrigation, including drip and sprinkler systems, Financing strategies must be specific to local agricultural conditions. You cannot do one size fits all. Dryland and rain-fed farmers face different requirements and risks from those in irrigated regions. So their requirements are very different from those who are in irrigated regions. Credit products must therefore reflect the crops, the climate, the water availability, and production conditions of each area. Again, I'm digressing from the core thing which I wanted to speak. In my childhood, I've heard people who have been in banking sector earlier, even today I suppose that is true. There used to be a lot of agricultural emphasis and specializing departments within each bank. Agri specialists used to be there who would go and meet up with the KVKs and the farmers groups or whatever, at that time whatever was prevalent. I hope these agricultural divisions are present even today within the public sector banks. You may want to activate them much more than what they are doing today. There's more work for them. The focus must remain firmly on small and marginal farmers. Agricultural lending cannot become concentrated among larger farmers, merely because they are easy to finance. This is not a feature just when I'm dealing with agriculture and public sector banks. This is a feature when we're talking about corporate lending also. Easy to lend to one big ticket account, your target is met, but MSMEs are waiting in queues. Similarly, here, small and marginal farmers will have to be attended to, and a deliberate step will have to be taken to attend to them. Banks must widen their reach and ensure that institutional credit enables small and marginal farmers to raise their productivity, diversify cultivation, and adopt better technology and connect with rural remunerative markets. Overall, our public sector banks should continue to maintain their focus on achieving PSL targets and sub-targets. This requires granular monitoring throughout the year. And I would charge the DFS with that responsibility of not being with kid gloves when you're dealing with public sector banks and public priority sector lending. The objective should be ultimately to ensure genuine and productive credit flow to the intended beneficiaries. PSL should be seen as an opportunity to deepen formal credit, expand the customer base, create stronger enterprises, and support broad-based economic growth. I'll move over to talking about the scaling and to leadership. Public sector banks today have advantages that few institutions can replicate. A vast customer base, extensive branch network, presence across geographies, strong institutional experience, and growing digital capabilities. These strengths should translate into stronger competitive positions in businesses and customer segments where our banks have the potential to lead. At the same time, every bank need not pursue every opportunity in exactly the same manner. Each institution should identify its distinctive strength, whether arising from geography, customer relationships, sectoral expertise, technology capabilities, or international presence, and then build upon them. Our public sector banks should therefore be strong collectively, while also developing distinct areas of excellence and leadership individually. This will create a strong and more competitive public sector banking system as a whole. A word on the building relationships across the customer life cycle. The discussions on youth also point towards a larger opportunity for banking. We need to increasingly think in terms of customers' financial life cycle rather than individual products. A young student becomes an employee. I'm repeating this point. Once I said it under the youth category, now I'm doing it again. Shows the importance of this approach, which you have recognized, and I appreciate that. So, a young student becomes an employee or entrepreneur. A micro enterprise can grow into a small and then a medium enterprise. A depositor can become an investor and a wealth management customer. Our banks should be able to accompany customers through these transitions rather than engage with them only for a particular transaction. This requires institutions to understand customers better and anticipate how their requirements will change over time. The objective should be to build relationships that deepen as customers progress through different stages of life, of their lives. Such enduring relationship can also strengthen the liability franchise of banks through consistent service and relevant financial solutions. So, what I would like to see, this is what I'm going to say now, as to what I would like to see after this confluence, that is after today. As you all return to your institutions, I would like to ask you, or I would like you to ask a simple question. What will we do differently because of these 2 days? The value of these deliberations must ultimately be reflected in what we change and what we achieve. For some time, it may be building a strong relationship or a stronger relationship with younger customers. For others, it may be addressing gaps in priority sector lending, strengthening a business where the bank has been underrepresented, or building a distinctive area of leadership. The answer will not necessarily be the same for every one of you. When we review progress, I would like the conversation to be about outcomes. How many young people have been brought into meaningful banking relationships? How far the quality of PSL has improved? Where our banks have strengthened their competitive position? And which ideas emerging from this confluence have actually been taken to scale? As a result of these 2 days' deliberations, I expect that every public sector bank and every PFI who's present here will take back with them clearly identified tasks to be undertaken in a time-bound manner. The Department of Financial Services should ensure this and also monitor the progress on the deliverables over the coming months. So in conclusion, our public sector banks have demonstrated their ability to transform. These actually 2 days have impressed me, that all of you all have stayed put, applied your mind, rigorously discussed things, and were able to present a bunch of actionable, time-bound decisions. The next phase should be about converting this institutional strength to greater ambition, competitiveness, and leadership. Our banks and our financial institutions should help shape finance and also enable the vision of Viksit Bharat. I appreciate the efforts of all participating public sector banks and the PFIs, the chairs and the co-chairs, teams, experts and officials who have contributed to this conference. Let us ensure that the ideas generated over these 2 days are carried forward with the same energy and purpose with which they have been discussed. So thank you very much.